Ladies and gentlemen, welcome back to the channel. AMC stock is up about 2.5%. Now, the Russell 2000 is also up about 2.5% as well. Let's go ahead and get into what is happening in our markets today. The Russell massively outperforming. I'm not going to say we called this, but we called this. This happened. We expected this to happen. We profited from this. Now, what is next? I think that's always the most important question to ask. Whether you make money, you lose money on a trade, how do I improve if I did something wrong is always what you should ask yourself. If you were betting the markets were going to fall, why? Why was your theory false? And what's coming next? Always looking ahead is more important. Sounds cliche, but it's true. The windshield is always larger than the rear view mirror. Now, we're going to go ahead and get into some news for AMC stock as well here in this video. It looks like, unfortunately, Ortex is not working. Client side error. I tried it on my phone. I tried it on the iPad. I tried it on desktop, and you're getting this service error. Maybe not. Maybe it's fixed now. Huh. Look at that. I look like a liar. That's awesome. So we'll be able to go through some of the option activity as well as the short position numbers as well here in this video. So let's go ahead and just jump straight into it. First things first, what's happening in our markets today? Big story, 10-year treasury yields continuing to decline about 13.5 basis points today. Now, let's look at the Fed rate monitor tool. Let's refresh this page to see exactly what markets are pricing in. Very interesting. So what we got yesterday was the Fed. Now, the Fed essentially just came closer to where the markets were. So back in September, the Fed was pricing in about one rate cut. Now the Fed, we'll go ahead and repost that. Now the Fed is a little bit closer to the markets. The Fed said they were going to cut rates about 3 times. Now, post FOMC meeting, the markets are pricing in about 5.5 rate cuts. So, the Fed came closer to the markets move further away from the Fed. It is what it is. The markets are just saying, yeah, you're not going to cut 3 times. You're going to cut a lot more than that. So that is causing the 10-year to fall. That is very bullish for interest rate sensitive names, for companies that are sensitive to Fed policy, right? We're expecting more rate cuts. How is that going to be negative? It's only negative, and I mean only negative, if the economy goes into a recession. A slight slowdown, that's okay. Recession, that's not okay. Now, we got good news today. Very, 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 very good news. Retail sales month over month for the month of November came in positive 0.3%. The estimate was negative 0.1%. Now, why is this good news? The economy is too hot. Put that in air quotes. Too hot. Well, because it's showing we're not heading towards a recession. The inflation is coming down. The Fed is saying they're going to start cutting rates, and the economy's holding up. That is a soft landing. Now, a lot of people, will point to historical context and say, whenever the Fed starts to cut rates, that's when markets fall. And I agree with that. I do agree with that. But the narrative of why the Fed is cutting rates will be most important. Is the Fed cutting rates because the economy is starting to go into a recession? Or is the Fed cutting rates because the economy is doing fine, just fine, but inflation is coming down? What's the reason? Inflation coming down or the economy heading into a recession? This time it looks like because inflation's coming down, and that is great news. Now, at some point, I expect in 2024, the data will start to look worse. I assume so. You could also make the contrarian argument that we've been in a rolling recession for the last 2 years, that maybe we actually accelerate in 2024. I could see that as somewhat plausible if inflation does continue to fall, if you continue to see deflation, gas prices, that's a big one. If you continue to see gas prices fall, that could open up more money for consumers to spend. Let's be honest. For average America, gas is a big expense, right? If you're saving, call it $5 or $10 a day on gas prices, I know I drive a lot, I'm sure a lot of you guys drive a lot, then that could open up the door for that money to be spent elsewhere. $5, $10 a day doesn't sound like a lot, but I mean, what? $5 a day times 365 days a year is $1,800 a year. Right? Times that by 2 at $10 a day, that's $3,600 a year. Times that by 340 million Americans, probably with all the immigration, you're at about 340 million adults, I would imagine, in America. I mean, that's $1.2 trillion. $1.24 trillion. That's a lot of potential extra money just because you're now saving potentially a couple dollars a day in gas, right? Just some rough math. Obviously, this could be totally inaccurate. Maybe you could divide this by 3. Maybe that's a more conservative number. Too many 6s there for my liking. But hey, that's $413 billion potentially, right? I think that's a little bit more conservative. That's quite a bit of money. That's about 1 month worth of spending for the American consumer, maybe 2 months of spending, depending on what month you're looking at. During the holiday season, numbers tend to be a little bit higher. We had about $500 billion worth of retail sales for the month of November. So maybe for like a January, February, around there, this could be like 2 months worth, or March or May or whatever. You get the idea, right? You could make an argument that due to some deflation, not too much, but a little bit, people could spend money elsewhere. That could be good for our markets as well. So I'm not sold on the whole recession thing for 2024. I think if anything, 2025 might look more recessionary to me, because politically speaking, you've never seen anyone win a re-election during a recession. And last thing they want is Mr. T-Man just strolling in there scot-free with no worries in the world, because a recession won him the election, essentially. Now, we do have some earnings that come out today in after hours and tomorrow in pre-market. I don't think these are too important, but a little bit for sure. Costco will report earnings today in after hours. I do have a trade on Costco if you guys want to see that. Check out the link down below in the description of this video. Now, you will also have Darden Restaurants that reports Friday pre-market. Think like Olive Garden. I think they own some other brands as well, but Olive Garden's like the big one that everyone looks at in their report. So Costco, big one for the consumer. Darden, more of a luxury kind of experience. Are people still willing to spend on going out to eat? What I've personally seen is yes, but bills are getting lower, and not as often are people going out. I think it's just probably the time in the cycle for restaurants to take a bit of that slowdown. We'll see. Looks like Costco is pretty priced for perfection as well, so we do have a trade to the downside on that one. Again, 10-year treasury yields falling dramatically. That is great for stocks here today. Now, January, you're pricing in about a 21% chance of the first rate cut. For March, you're firmly pricing in the first rate cut, 66.4%, a 16.1% chance we have 2 rate cuts by March. For May, you're pricing in another rate cut firmly at 64.3% chance. So now we're firmly expecting 2 rate cuts by March. We are expecting, it looks like, a pause. Wait, nope, I'm reading that wrong. Another rate cut in June. Another rate cut in July. In September, another rate cut. In November, another rate cut. And December, it looks like that's when you're expecting to actually get another pause. So right now, markets are expecting a lot of cuts, my friends. Let's see exactly. 1, 2, 3, 4, 5, 6 rate cuts are now expected for 2024 for our markets. That's a lot. I mean, 1, 2, 3, 4, 5, 6, 7 rate cuts has a 32% odds. 6 rate cuts has 37.2%. So yeah, definitely a reason that this is why stocks are rallying. The more good economic data we get, the more progress we see on inflation, the more aggressive this rally is ultimately going to get. Now, one thing that I do want to show you guys is the 10 and the 2-year yield curve. I expect this to start kind of uninverting here as your short duration treasuries should start to fall more than your 10-year treasuries, right? You should start to see near-term rate cuts affecting the 2-year more than the 10-year. As of right now, that's not exactly happening. You are still inverted 42 basis points. When this goes uninverted, that's where you might get a little bit more weakness in our markets, but that is a little bit uncertain at this point. Now, what is this good news for AMC stock? Well, this headline says AMC stock. AMC just cut $62 million of debt off its balance sheet. Dilution is still an issue, though, for AMC. And it looks like AMC has completed the at-the-money offering. AMC repurchased $50 million in principal of its 2026 10% second lien at an average discount of 19.67%. The company also exchanged $12.275 million in principal amount of its 2026 10% second lien notes for 1.6 million shares of AMC stock with an implied share per value of $8.19. Both of these figures include the accrued interest. So a little bit of good news. Hopefully AMC stock can start to come out of this rut. We do need to see AMC be responsible with the capital they just raised, because if they go back to the markets and raise more capital, AMC stock is turning into a penny stock very, very quickly. Now, let's take a look at some of this option activity. You got about 7,000 calls currently in the money, 214,000 calls out the money, 25,000 puts in the money, and 80,000 puts out the money. So quite a bit of option activity on both sides here, but definitely the calls are most notable. Today is Thursday. Tomorrow is Friday. I'm expecting just a solid rally throughout the rest of this week. Next week, probably the same as well. If you have a portfolio in small and mid-cap stocks, there is a lot of upside still to go in those higher quality names, right? Not everything's going to perform well. Not everything's going to do well. But if you have high quality in your portfolio, you should be sitting pretty good as of right now. I think my more risk-on portfolio is up like 20% today. Something crazy. So yeah, I think that continues for a while. Point in being, we'll talk about this a little bit more in the next video. I think this could actually cause a MOAS-like event. Just simply put, there is the lowest allocation of stocks that you have seen in history. And there is the most amount of investable capital out in the markets virtually that you have ever seen before. 2021 obviously had a little bit more because people were, there was just a little bit more money out in circulation than there is today. But still, lowest record allocation of stocks, almost a record amount of cash out there. I think that only leads to stocks going higher. I don't know. Maybe I'm wrong. Maybe that's too much of a simplistic view. But given everything else going on, given rates falling, given all these other things, I think that's probably the most accurate view of, how to look at our markets right now, especially as the economy is holding up. If the economy does start to falter, then this is going to be a totally different conversation, and I will get bearish faster than anyone else. But as of right now, it's just not happening. Now, option activity today for AMC stock. You have seen one order totaling $154,000 with a positive order value of 100%. Let's take a look at the short interest here as well. You do have 8.53% short interest. Ouch. I don't believe these numbers at all, but if you do, you probably don't want to be in AMC stock for any kind of squeeze event, because it's not happening if you are only 8.5% short. Ortex says you have $143.51 million worth of short positions in the stock. Days to cover 1.02, 21.07 million shares that are currently sold short. Shares out on loan 10.04 million. Cost to borrow 1.15%. Utilization of 21.53%. Short score of 49.29 out of 100. So not the most impressive numbers nonetheless that you are seeing, but AMC stock is still up 2.5% here on the day today. Not a terrible day. The stock is about to break into the $7 range. This could set us up for an even larger rally to that $8 level. I don't think that's probably not going to happen tomorrow. We'll have to see. We've seen crazier things happen, but to firmly get into the sevens tomorrow is pretty much what I'm expecting, hands down. Now, the RSI at 43.06. That is also definitely on the oversold side, right? So there is a lot more room for a rally from here, and the MACD is pretty neutral on the day. So take that as you will. Let me know what you guys think about this down below in the comment section. Thank you guys for watching. Hit the like button and subscribe to the channel. You guys enjoy the rest of your day, and I will see you in the next one.